record this thing. Tuesday, April 2nd. What's the drivers first? We're sitting in a conference room. We're talking about markets that seem to be pretty resilient. Any headwinds, they shake off and they make these highs in the upper 2,800, even handling the S&P E-minis. Doesn't matter if it's Boeing or U.S.-China trade, Mueller report, anything that could be negative, they shake out, shake off, and rally. So there's some underlying strength. The FOMC created this a few weeks ago when Powell talked about lower rates and was dovish. We came out of that weekend strong. We haven't really looked back, even though there's some negativity. What's driving us going forward? U.S.-China trade's been quiet the last couple of days. That will resurface. That is still important. Trade war bad. Trade deal good. Brexit is kind of like a dead fish that might still be able to swim. The market grabbed a bid. The pound did when Goldman Sachs thought there'd be some sort of deal in the future. The pound liked that, and that rallied. But who knows what's going on with that? It's not as important as like U.S.-China trade deals and trade wars and stuff like that. But it does kind of go with some importance. And I think if they were to announce right now they got a deal for a soft Brexit, we would rally knee-jerk wise. ISM came in yesterday, second biggest number of the month with a slight gain. The market liked it, but the market's in the path of least directions up. So bullish numbers are easier to climb with. Non-farm payroll number comes out in a few days. Trading room guys, we open the room early for that as we do on every Unemployment Friday, 7:15, 15 minutes before the number that comes out. Because last month's report was only 20,000, people are going to look at this report, and if it's another down number, there might be chatter of, is it a recession? Is there job problem in the jobs market? Maybe back-to-back bearish reports. 20,000 was the print versus 180 expected in that payroll headline number. So that number is 7:30 on Friday. Right now in the middle of the week, we got some Fed speak. We got some grind. We got some chop. It's spring break. It almost feels like the summer because of the spring, but that doesn't mean we don't move. We have a couple moves. You just got to be a little bit more patient. You got to be better at paying for your trades. You got to be better at finding locations because there's less of them. And you just got to be consistent that, a 5-point winner isn't as easy as it might be when it's faster, when it's moving quicker. Foul tip, baseball just started, so just use that analogy. You're just looking for the right pitch, but you're foul tipping to stay alive. And so when there is a good pitch, you don't miss it, and you're just standing there, strike three, and it was a hanging curveball. You got to know when to swing, but you also have to know when to take a pitch. All of this stuff is just general coverage of what to expect, what's been going on, kind of a preview, review. For today's meeting, we're going to talk about the CME Index micros. I didn't plan on talking about this at the beginning of the year, but I think this is maybe a transformative introduction or instrument that they've introduced in May. Or it's going to come out. I don't have a date in May yet. Maybe somebody else does. But the month of May, which is a month away, is when they're going to roll out these CME Index micros. We're going to talk a little bit about them. I think it could be transformative because it's a cheaper way to trade, to learn, and maybe even profit without being $12.50 a tick or $5 a tick in the NASDAQ, and that moves like crazy. So we're going to get into that, but I want to talk about my opinion of all of this, but why the CME is doing it. Number one, we're going to talk about the specs on it, on the products that they're doing it for, and then my opinion and anybody else's opinion that they might want to share. But I think that this is, let's just take the simplistic approach of the why, the how, the where, the when, and how it could help a lot of different people. Even if you are successful in the underlying main minis, this could be a helpful market. So first, why? Why is the CME doing this? They're doing it because the notional value, this is a quote from them, of current minis have become too burdensome for many traders. Right? The rally in the Dow and the NASDAQ and the ES over the last 10 years, especially since the inception of these mini contracts in 1997, become too high, so the margins are too much. And therefore, a lot of traders, retail traders aren't even traders yet, looking to trade. The minimums are too high, or they go underneath and they can't participate. They got to go on SIM. So the CME sees this and says, well, how could we create a market that's familiar, that's comfortable, to create liquidity, but offer it much cheaper, a lot like what? Forex. So we'll get into the specs. Well, before we get into the specs, let's go back to why. Forex, in my experience, not trading, but my experience over the last 5 or 6 years educating, is everybody I've ever talked to that gets started trading, most people will start in Forex. Let me draw some things up here. I feel like drawing right now. So most people will get started, and when they think about trading, they're exposed to the FX markets, foreign currencies. Why? Because everybody has a familiarity with currency. We use it. So it's easy to understand what it is. Okay, there's pairs, they trade against each other. Second reason is you could open up I think you can open up a FX account with a credit card. The problem with foreign exchange, with those markets is they're rigged, for lack of a better word. You know, you see a bid, you see an offer, you can't get short, you can't get long. And so it's generally the first introduction to trading that people will have. Then they might think about stocks. Why stocks? Because while it's easy to understand a currency, people start understanding stocks a little bit more, or have an understanding of stocks. And so they might participate in that. And then if they get around to sticking in the market, futures is generally the last thing they'll find. That doesn't mean that's the last thing you guys found or the last thing everybody finds. I'm just telling you the general progression is Forex, stocks, and futures. Because futures are hard to understand. What is a future? Why do they exist? What do you mean? I could sell something I don't have and get short. Margins are really better and the leverage is good. The fact that the leverage is good, the fact that it's liquid, it's more transparent, it's regulated makes it better than Forex. But the fact that they don't have any cheap markets to trade make it less attractive than Forex. Forex has cheap markets you could trade. So people will tend to run into it. And the CME wants that business. They want that liquidity. So they get together and they say, well, why don't we take the products like we did in the late 90s? We had an S&P, a full S&P contract was worth $250 a point. Well, let's create this E-mini product and just call it $50 a point. Not a tick, a point. Tick 1/5. And if you guys, you wouldn't remember this, but on the CME, they had 2 trading floors, upper trading floor and lower trading floor. I was on the upper. They had big TV screens in the corner. And they had a closed circuit TV. They had a video camera on the opening bell and the grand launch of these E-mini contracts. And the pit, if the pit was like that, there were grandstands along one side, just like you would see at a baseball game, right? At a Little League game. And there were terminals every so often. 70% of the terminals were empty. There were just people spotted all around. We were laughing as the bell was being rung in 1997, watching on TV. After a few months, all this filled up because they realized the advantage of seeing what the big S&P was doing in order to trade any kind of liquidity that was on the machines. And this is before electronic trading really hit the States to the tune of about 3 years. Now that edge went away. Eventually, years go by and this big contract goes away and the E-mini absorbs all the liquidity. And that's what you guys see on your screens, and that's probably the most popular futures market that retail traders and even professionals will come in and trade. And there's 2 reasons why people, and I'll get into this for my opinion on whether the micro markets will work. There's 2 reasons why people will look at the ES as the most popular market. Number 1, it moves. And number 2, it moves with liquidity. You need both. LIQ, we'll call it. Now, it moves, but not super fast. If it moves super fast, it's too risky for newer traders. So it does move. It doesn't rotate like the 2-year note or the 10-year note. And it has liquidity. So if you think about a 2-year note or a 10-year note, the treasuries, they don't move. They have a ton of liquidity, but they don't move. The NASDAQ moves like crazy. It's got some liquidity, but it becomes too risky. Same thing with oil and gold years ago, although oil is has thickened up. But the ES is the most popular for those reasons. So it would make most sense that this micro E-mini that we're going to talk about with specs to it will be the most popular of the micro complex. But just know this, the CME is doing this to make money, and they're doing this to compete with Forex. They're doing it to compete and give retail traders with small accounts the ability to trade, but then also create a way to spread. I'm going to talk about this in the next slide. And if you got any questions, pop them in. I'll do my best to ignore them. All right. So what are the specifications? First of all, you can get pretty bored with specifications, but if you don't know them, then it's your problem. Anybody should know the specs. I knew them just from growing up through the floor. And I remember someone came to a live event we did about 5 years ago. One of the brokers that hosted this live event just handed out a booklet of the specs and everything of all the products. And some of these guys loved the booklet because it was something close that they could look to see what's the symbol and things like that, something that was really handy. So we're going to talk about products. We're going to talk about symbols. We're going to talk about tick sizes, and we're going to talk about ratios. And I'm going to fill it in with my pen. All right. So again, you got questions, pop them in. May, I don't have a date, John, May of 2019, obviously. So it could be a month, could be 6 weeks, could be as much as 7 weeks. But we might have a date before long. So what are the products, first of all, in this micro contract? That's a good question, Raj. That's a good question. It'll be less, but I don't know how much less. Maybe the question, if I had a prize for the best question, Dr. Raj would get it, but I don't have a prize. Maybe the Calvin Klein underwear. No slides are shown. Do you guys see my slides in my screen? Joe, everybody sees my slide in my screen, so it's got to be on your end. Exit and come back in. Micro products. Or the micro, what are the products for this new micro rollout? All the indexes only. So the ES, the YM, which is the Dow, your NASDAQ, and the Russell, which is recently became a CME product again. So they're going to take the 4 stock indexes and create micros for all of them. It's going to be real easy for the symbols. Just put the letter M as in Mary in front of each one. That's it. So Mary, RTY, MNQ, MYM, MES, right? The month, you guys should know this. I shouldn't have to do this, but I'm going to do it. U is SEP. M is June. H is March. And Dece is Z. June, Sep, March, Dece. So then that number would go here if we're in the June contract, which we are. So those would be the symbols when they get rolled out. Those are only the 4 indexes are going to do it. They're not doing it for treasuries or currencies or metals yet. Obviously, they're going to roll it out with just the index futures to see if those work. Now, that's basic stuff. Here's the key, tick sizes. What is a tick in the ES? You guys, if you don't know this, not in the micro, what's it right now? A tick in the ES, not a point. Type it in. If you don't know this, then I got to come to your house and wrestle. 1250. A tick. Don't say a quarter. Say a tick. What is it? A tick in the NASDAQ. $5. What is it? A tick in the Dow. $5. What is it? A tick in the Russell. Russell. What is it? What do we got? Someone's got to answer before I continue. It starts with a 1. It's not 5. 10. So Russell's gets to be an expensive product to trade because it's got a nice tick size. And now remember, these are the existing minis. These are not the micros. These are the existing contracts with these symbols and what they are per tick. Okay. When you start talking points, that's generally real retail, like when they really get stuck in the woods about price or points. Tell me what it is per tick, right? Is it, Joe? You see my screen, yet? All right. I don't trade it. But he said when I went to the CME, it's only 5. Is that true? Hold on. I wrote all this down when I was reading. I actually got 1250. Hold on. Let's pause this up and find out. Because it was 10 on ice. That I do remember. And the CME has the $5 they're saying. Okay. Here's here's what I was looking at. Russell right now. They always got to quote you in points. Why do they do that? All right. We're sure it's 5. 5 it is. This is the current Russell. All right. When we move over to the micros, they're going to go down to the tune of 10 times. The ES is just going to be $1.25 a tick instead of 1250. The NASDAQ is just going to be a half a buck, 50 cents. Half a buck in the Dow versus 5. A half a buck in the Russell versus 5. Versus 12 half versus 5 versus 5 versus 5. It's quite a bit less. Now, ratio is all 10 to 1. So they are going to be fungible. Fungible means I could buy 10 micros and sell 1 E-mini and I'm flat. I don't have to unwind it at any one point. That's what fungible means. You would be considered flat. If you buy 10 micros, E-mini micros, micro E-minis, and sell 1 S&P, you'd be flat. So now those are the tick sizes. Couple great questions. What are the commissions? That's something we're going to have to talk to your brokers about. Everybody's got different brokers in there. In the research I did on the CME group, they didn't mention commissions because that's going to be adjusted per your broker. You're going to have to go out and find out, and I'll follow up and get back to us next week what different brokers are going to start charging for this. The next question is, so we will be allowed to offset the micros by using minis and vice versa. Yes, they're fungible. And this is where I got that here. Let me pull in the CME page. Let's, for now, get rid of the drawings and look at the CME page. When they come down in here and they talk about, they use the word fungible. Here. Can they be offset? Yes, micro E-mini futures are offset eligible versus their E-mini counterparts at 10-to-1 ratio. This can only be applied to offsetting positions. Requests can be made by your clearing broker directly to the CME clearing. You should just be able to do it in your dome. If you're going to buy, it's 10-to-1. 10 micros to every one E-mini. Back when it was E-mini to the big S&P, it was 5-to-1. This is a 10-to-1 spread, 10-to-1 ratio, rather. This is between the micro ES versus the micro ES. It doesn't mean you could buy 10 micro ESs and sell one micro NASDAQ and you're flat. No, that's a spread. This is product to product, period. Now, they also had a area that I think everybody should sign up for. That's why I'm bringing this over. Get the latest information on micro E-mini products. Fill this out. You go down, and I would subscribe to this. First name, last name, email address, whatever. You could put other. You don't have to put retail. You don't have to be too specific. But I would sign up for it if you're going to be interested, like I am and like you should, for any subsequent information we're going to get, because they're still saying launching May 2019. We want to know a date. All right. So this link, you want me to post this link in the chat box? I will. You guys got it. The link before that, where I got a lot of my information, just Google CME and go over this. I don't want you to get lost, though, in this margin maintenance and all of this offsets and stuff, because you're just going to get, that's not how anybody trades. And if you do, then you get into that. But I think you can get lost into the complexity and a lot of the noise and the details. Just remember, the CME is doing this to compete with Forex traders. Now it's going to give them a cheaper option for people to trade. So they're not on SIM, but yet they'll feel like they have skin in the game. And one of the biggest hurdles that the futures industry has is understanding what the hell a future is. I didn't get in, when I got into the business, I didn't worry about what a future was. I just was worried about their trading stuff here. You know what I mean? I was on the floor. So it was like, I didn't find out what a future was and what the value, I just backed into it. I was trading, making a lot of money before I really knew what a future was, honestly. Like why were futures made and everything else. It just backed into that curiosity. You don't have to know exactly why a future is a future and the history of it in order to be successful. You got to know how to value price. So I think the biggest question we got to get answered is commission. Commission should be lower by the factor of 10, right? If you think about it, if it's a 10-to-1 ratio, meaning my purchasing power is 10 times less, commission should be adjusted accordingly. That's the benchmark I would go by. But every broker is going to be different, because just remember this, it's new to them, it's new to us. The key is this one, exchange fees. When we talk about brokers, what I want you guys to know, because you guys are Edge members, this isn't just a very public webinar. Exchange fees and clearing fees both come from the exchange. Those should just be that should just be a pass-through cost from the broker to you. If that's you, and that's a broker, all right, that should be a pass-through cost, exchange fees. Whatever the exchange, we'll put the exchange here, charges Mr. Broker, he should charge Mr. Anthony. No money should be made. Now, some brokers have an overture. You should watch and look for that. Where the broker makes their money is commission, and that is called commission. There's also a small NFA fee. That's pennies, and that's a pass-through also. The big fees are these two. Exchange fees and clearing fees both come from the exchange. You can't negotiate those lower, but a broker could put an overage on it, and you don't realize it. Commission is where technically the broker is going to make their money, okay? So what you want to know is, how much do you pay around turn right now when you go in to discuss this? Don't get into sides and all this other stuff. When brokers say, well, it's only $1.25 a side. Yeah, but I got to exit the thing at some point in the future. So give me a side times 2 that's around turn. I hate when they talk in sides. They do it because it sounds cheaper. So let's just say, for example, say you are paying $350 a round turn, which means you buy one and sell one. ES, no matter what prices you sell it at or buy it at, you bought one, sold once, $350. Includes commission, includes exchange, includes everything. All in. And that's for the E-mini ES. The micro ES is the question. What is that going to be? If you're only making 1/10 buck and a quarter per tick, the commission should come down accordingly. We'll be interested to see if they do. This is a broker sensitive question, and I'm not saying they're sensitive with this question, but because it's newer to them, you are in a position to tell them that's too high or whatever. The more money you have in your account, the more active you are, the more leverage you have to get competitive commissions. And I only tell that to guys that are in this tight knit group, So other different ways to do it, but the brokerage quote to you isn't like going to Target and seeing a TV is $250. Generally, it's $250, right? Do you go up to the cashier and say, I give you $200 for it? People think that that's what a broker, it's just, it is what it is. It's not. You could based on the money you have in your account, maybe your activity per month, you could always negotiate better prices. And then when I do these one-on-one mentorships with people, I talk about what number that if you're above, you should get a seat lease and it pays for itself in the first week. And then the rest is gravy and commission. But that's not what this meeting is about. This meeting is about the tick sizes and how they're all going down by 1/10. 50 cents a tick in the NASDAQ, Dow and Y, and just $1.25 in the ES. All right. We got the products, the symbols, you got the tick sizes, you got the ratio 10-1. The big question is the commission. Great question. And we're going to follow up. I want people to go and ask their brokers. So next week we get some quotes from brokers out there. That's what makes a good community good. Excellent question though, Raj and Todd and Joe. If I had a gift for you guys, you'd get it. Calvin Klein underwear with the Edge logo. We don't, and by the way, this whole joke about Calvin Klein, they're not underwear and they're not boxers. So anybody in this room, males, are wearing boxer briefs or you're not allowed in the community. Boxer briefs. I don't want anybody wearing boxers or wearing briefs. Boxer briefs or you're not an Edge member. If you don't wear underwear, that's fine also. I can't, but if you're going to wear them, boxer briefs. CK along the band, and the reason why, it's because they're the best underwear. They're not expensive. You don't have to have a lot of money to have nice socks and nice underwear. Number one. Number two, and this is a tip, even though it doesn't have to do with trading, but it does. You don't have to have a lot of money to have nice underwear, but it does make a difference. You don't have a lot of money to buy nice socks, but it makes a difference. Never wear socks with holes in it, throw them out, and always have packages and packages and packages of nice socks. There's nothing better than putting on a nice, clean pair of new socks right out of the bag. You don't have to have a lot of money for any of this, but it's called comfort. Here, you want another tip? No, I'm not gonna go around and check Ron. Although in basketball, he did a jockstrap test or basketball practice at St. Joe's. He did a test. If you didn't have your jockstrap on, you got to paddle. I don't think they'd let that fly nowadays. I might put the Edge logo, maybe the Edge arrow, like this. Edge. We'll hand out some logo CK underwear. Edge. Talk about politically incorrect. I love it. All right. So what do I want to say before Ron interrupted me? You screwed up my train here, Ron, and I had a good one. Now, I'm not going to put my picture on it, Drew. We'll put this arrow. This is the logo that would be on it. So it would be like the underwear. We'll tick laugh. You don't want laugh on there. This on there. Edge. All right. That's enough. So next week, let's circle back and see what kind of commission answers that we come up with. It'll be interesting, to be sure. Now, to my most important part, I think, of this, opinions. First, my opinion. And then if you guys have opinions. Number one, that's before we go to opinions, I was talking about socks and underwear. Here's another thing that you don't need a lot of money. You need money, but not a lot of money to have, and most people don't. Just think about this. You should have one of the nicest beds they make. You should have the nicest sheets that they make, the nicest pillow that they make, the nicest socks, and the nicest underwear. You don't have to be a multimillionaire to afford those things. But I'm telling you, what do you do most of your life? You're sleeping. Have a great bed that you love. They're expensive, but they're not that expensive. I'm telling you, in this business, you sleep better, you trade better. There's no excuse to have a mediocre bed. You don't have to be Donald Trump, multi-millionaire, billionaire to have a nice bed. But think of how important that is. All right, my opinions. I bet you didn't think we'd talk about boxer briefs and beds at a trading webinar, but there are no maximum when it comes to tips in this community. Opinions on these micros. Type them in if you got one, but listen to mine. In any market, I don't give a crap if it's for bananas or cars. Any market, any instrument, stock has to have two things in order to be viable and opportunistic. Number one, it has to have some semblance of movement. It has to be able to have direction. It can't be a 2-year note or a 10-year note for most of us. Those are tradable, but they don't move. So a market that's introduced has to have movement. And number two, it has to have liquidity. Now, liquidity is different than volume. And I'm going to show you why. HFTs will talk about, well, we provide a lot of volume. You provide volume, you don't provide liquidity. The difference between liquidity and volume is volume could be what might trade at a price. Liquidity is what trades at price. So I don't care. At the end of a session, if 1.5 million contracts traded, then that's liquidity. But don't tell me that you provide liquidity on a dome. This is a dome, right? And this is the price 3 offered, and this is 2 bid. And there's 400 contracts on the bid and 400 contracts on the offer. High frequency market makers say we're providing liquidity. No, not if only 150 traded each time it went through there. You're not providing volume. Liquidity is what trades. Volume is what might trade. So the volume up and down the book means crap. The liquidity at each price is what matters. And you have to have liquidity. Liquidity is risk takers, people willing to buy it and sell it. So you need people to get out of positions, to get into positions. One without the other makes for a dangerous market. One of the problems with Forex is they'll have a market that's 2 bid and 10 offer. Yeah, 3, 4, 5, 6, 7, and 8, 9 could trade, but they don't. They're too wide. The bid offer spread's too wide. That's a dangerous market. If the bid is 2 and the offer is 10 and I buy 10s, where am I going if I'm wrong? All the way down to 2, I can't get out at 9 or 8. I might not even be able to get out at 2. It might go down to all the way down to 98. And now I'm offering 5s. So see the reach when you get long, the reach, because it's wide. Risky when it's wide. I don't care if it's $1.50 or not. All right. So you want liquidity. You want to see volume that's willing to trade tight as possible. So if this market's going to read the same, it's going to be a quarter bid at 50 offer. All right, let's call it 61 half bid or offer, 61 quarter bid. You want to see whatever volume could be decent on the bid and on the offer. So where the best bid and offer could meet, they're truly the 1 tick apart. If this opens up and it's 61 quarter bid and the next offer is 64 even and it's only for a one lot, that's crap. As you look at the ES, it's trading every tick with good size. So what am I going here? The only way this is going to work is if I could get this one lot and the ES is spiking 4 or 5 points at a time. Because what's going to happen is when the ES goes 63, 63 half, these 64s get pulled, don't even trade, and they're 65 offer. So you got to have a tight liquid spread on all these markets. The best chance to have it is going to be first in the micro ES because of the liquidity it already has in the mini. So to me, this is going to be the best one to have that example. If it doesn't have that example, don't think it's a viable opportunistic market. It just becomes opportunistic. And don't say to me, well, it's only $1.25. It's not $1.25 if the offer is all the way up at 63 even and the bid's all the way down at 61. That's an 8-tick difference in the spread. It's $1.25 if the best bid is 62.75. Then yes, then it's a good or it's a 1 1/4 tick risk. But if the spread's too wide, then you got to add up all these 8 ticks. Then it's actually your risk is 8 times 1.25. It's almost $10 a tick. So that's not your risk anymore. So what's the spread between the best bid and best offer? You ain't going to know till you see it. And it's got to trade. So if you have a 62 even bid and a 62 quarter offer in the ES, okay, these are evens, these are quarters, and it shows 3 by 4, right? 4 on the bid, and it turns, and the 63 quarters go bid, the market goes up, right? And none of these trade, then it's not liquidity. It's BS. It's just the volume was showing. So you know the difference between liquidity and volume. They can be the same thing, and sometimes they're just not. Now, exactly what Tom just said is my second opinion. My first one is this whole idea of liquidity and volume. Second opinion is for many people in this industry, some people in this community, but a lot of people in this industry, this could be, if indeed it has good liquidity and it moves, it'll move because the other underlying contracts move. But if it has good liquidity in that movement, it's going to be a much better alternative to sim trading. If it's tight and a tick wide, if, Tom, you're able to get in and out within a tick or two because there's contracts willing to trade in those areas, then yes, it's a much better, cheaper way to trade than a 12.50 tick per contract in the ES. And it's better than sim because you have some skin in the game, so you could start dealing with the psychology and the emotions instead of not having any of it when you are on sim. So for the very reason why the CME has rolled out these contracts is to get people, give them a better chance to succeed. And if there is liquidity, it'll put some lower hanging fruit, in my opinion, for us and for those who know what we're doing, because maybe you get some people leave stuff in the book because you got a lot less informed people that are trying to play. The algorithms and the machines will clean some of that up, don't get me wrong, but the less uneducated people participating, the better for the educated people. So this is going to open things up and get a lot of Forex people trying out futures because it's inexpensive now with lower margins to open an account. One thing I want to tell you guys is that there's minimums when you open an account with brokers. Try not to just play the minimum. Put bullets in your account. What you open your account with doesn't mean what you're willing to risk. It just gives you a cushion, psychological cushion. So the margin requirements are going to be a lot smaller because this is 10 times the tick, but you don't know that until you see the liquidity. On the surface, it's $1.25 versus $12.50. It's 50 cents versus $5 in the NASDAQ, Russell, and YM. But if the spreads are wide, then the risk is the same. And the brokers will have to take that into consideration when placing or considering margins. If it's liquid at every price, it's not going to have hundreds maybe, but who knows? then the commission should be a lot cheaper, and you guys are going to go out. We're going to find out what good commissions are going to be. And then number two, it's a much better alternative to demo trading because there's some skin in the game. Maybe you'll actually turn your success into it. And that's what I was thinking about yesterday and last night when I was preparing for this webinar, was this could be really great for the people on the fence. And we got people in this community that are succeeding. We have people that are not, that are still trying. We got people on the fence. Like any community is going to have that. I know our prop firm had it back in 2000. We had guys knocking it out of the park, guys making money, guys on the fence, guys losing money. You're going to have that in any arena, any environment. I think this will be, it might, just my opinion, bail out people that are on the fence. Well, that's a different mark. So they have a micro crude. It's a mini crude. And it's every quarter tick. It's not every penny. I don't know if it's apples to apples, Larry, but that's a good question. And they've had that a long time. So I think that in May, subscribe to that link I gave you guys to get updated information from the CME about this product. And understand why they're rolling it out. Understand that it could be a dud, but also understand that they thought the ES, the E-minis, was a dud in 1997. And it was until it had liquidity. I think coming out of this webinar, you understand what liquidity is and why it's important in any market. You understand risk a lot better, and now you understand these micro futures contracts and what they could provide and opportunities they could open up. But the L word has to be in there. Liquidity. If you have a lot of liquidity, but it doesn't move, then it's like the 2-year note. Where are you going with that? That's good for people using the 2-year note for other trading strategies, not an outright trade. So I didn't want to roll this event out too far in advance of the May release because it just came slowly. I wanted to see the later you wait, the more information there is, and then give us time, but also didn't want to do it after that they roll them out because then we can get some questions answered like good commission rates the guys are quoting back. I'll share that with others next week. Email me what your broker is going to quote you, and then we'll share that. That's the power of a community. But you might have to have different settings for edge zones. There'll be a lot of cool stuff if there's liquidity, and we'll go through that in future sessions. Tom also asks, at these price points, does this strengthen and provide more overnight and longer term holdings and strategies? I don't know. That's my best answer. I don't know. It might, because if you're holding an overnight position, or you don't hold an overnight position because the margin requirements are too high, but now you can, yeah, maybe. But I don't know. I don't think it just turns you into a long time frame trader. But the margin requirements in overnight carry go way lower. It could. But the bottom line, Tom, it always comes back to location. It's always easier to carry overnight positions if you got them in the money and you're in good locations. This will help the psychology of trading to have people with skin in the game, but not enough to blow their account out when they're wrong. And it really could get them to maybe build their size within this micro or then go to the mini, right? Maybe there's enough money to be made in the micro. You just got to trade it bigger than one contract if the liquidity is there. So that's the thing. You could be a 6-lot micro trader. The other cool thing, and this was on my sheet as the third opinion I had, is this, if it's liquid, will create the ability. Let me erase this. So the first opinion is liquidity. The second was demo versus live. And then the third is you'd be able to build your size and still keep it cheap if there's liquidity. And you could then play the scale game without having to trade 2 contracts in the E-minis, which is $25 total a tick. Now, if you traded 2 lots in this micro mini, it's $3. No, it's $2.50. Don't worry, I'll get the math right eventually. So it's only $2.50 per tick with 2 lots, then $25. Much easier to stomach. So you'll be able to work on scaling out and taking profits and building size in a much cheaper fashion. This is a great thing for everyone, if there's liquidity. And liquidity isn't just volume. It's volume that's willing to trade. Or else they're wasting your time on the phone, right? That's why real estate agents will qualify buyers instead of taking them out every weekend, 5 weekends in a row, and they waste 10 hours, and they finally find that the guy's looking for $1 million homes and he makes 60 grand a year. You're not, as a real estate agent, you're going to qualify the buyer, right? That's not liquid. That guy is not a liquid buyer of real estate, the price range he wants. So if this market's liquid, people willing to buy and sell when they put their orders in the book, and there's actual good volume, then we got it. Then we got a good market. It's going to be a good market for beginners. It's going to be a good market for people on the fence. It's going to be a good market for people who are trading the big ES and want to be able to scale cheaper. It's just going to be good for everyone if it's a good market. And a good market is one that moves with liquidity. If there's liquidity, it'll move. I mean, it's going to move right with the ES. You're not going to see the ES trading 70 even and the micro trading 69. Computers will level it off. But the size that you're looking to implement your strategy will be cheaper, and you'll be able to do more things in stomach while still training yourself through the emotion, because it won't be demo. And one of the weaknesses to demo, and you guys know this, is no matter how hard you try for virtual reality, you know you're not being shot at. You can do all the virtual training you want in war games, but you know you're not going to get shot. When you're out there on the real battlefield, you are getting shot. And I don't mean to say training is more important at all to fighting in the military. It's not, but sometimes the brain doesn't know the difference when it comes to money or your life. So you want a little bit of reality of what it takes to lose and make money and be able to scale inexpensively instead of being all in. And then there were markets people would start to trade like gold and oil back in the day. And I would tell them that's a very difficult market for it to be the first market you made money in. When I started trading, I didn't start trading the DAX. That would have been a first tough market to make money in because it was expensive. It was like 25 euros a tick. But the Euro Stocks is a great market to not only learn and make money in because it was only 10 euros a tick and it was liquid and it moved. But then you were able to grow my size and then trade the DAX. It was a great left-right combination. That question, I don't know. Tom asks, is it small enough to be of no interest? I don't know. We'll have to see how small it is to be interest. The HFT community is a whole different game, where they're just trying to race big orders. So Stan says it'd be interesting to see how the exchange handles the fungible aspect. For example, if he buys one micro 100 times, am I providing the buy side liquidity on the micro? Yeah, right. We'll see how everything shakes out. First day, you look at it. Second day, second week, you look at it and see if there's any tradability to it. But the most important thing to look at is it's going to move along with the E-minis. Could be an absolute dud, but it could be a great training product that you might stay in if you're consistent. But a great training product because there's cushions, there's liquidity to get yourself in and get yourself out. And it doesn't cost you $500 on a bad day, but maybe only $50. Big difference. So that's why I'm encouraged about this, and I hope it is liquid. I hope it does work across all the stock indexes. But you got to have people trade. And just if it's not liquid early doesn't mean it'll never be liquid, right? But we'll see the kind of job the CME does to promote it. The big hurdle that a company like the CME always has is, what is a future? And to me, I don't think that's an important question to ask because I didn't know what a future was. I think you should know what a future is and why they exist, but also it's not going to be the difference between why you make money and why you don't. Guys, if guys struggling throughout 2 years of trading, it was, I didn't know what a future was. No, that wasn't the reason. So those are my opinions. Those are the specs. That's the potential launch month is in May, and because we're in early April, it could be as early as 1 month away. We'll see. I think this has a better chance of working of the other products they roll out, including the mini oil and everything, just because the ES is their flagship product anyways. Any other questions? I do want people to leave and come back with quotes from their brokers as to what, not just your commission quote, what's your all-in. Get some all-in quotes for trading the micro E-mini. And that's how you say it. Micro E-mini, micro NASDAQ, micro Dow, micro Russell. May is the launch. Liquidity, better than demo, gives you the opportunity to scale. It still says May 19 launch. Subscribe to the bottom of one of their pages of the link that I put in there so you guys could they might keep us informed to any changes or exact dates on when it gets rolled out. I subscribed last night. I popped the link in the chat. If you're watching this on a recording, just go to CME.com or just Google CME Group micro information. You'll find it. You guys are at a much better position understanding the micro than you were 45 minutes ago. Well, an hour ago. Any other questions? I want you to, as we go, these are our weekly Edge Tuesday sessions. I know a lot of you guys are in the trading room on the daily sessions, and you already know this. But if you're not in the daily trading room, you're watching this on recording, just make sure you're not caught off guard with future U.S.-China trade deal talks. There will be more. They're quiet the last day or two, but we're either pricing in for a deal or no deal, and I think that April is going to be an important month, a transitional month, as to whether or not they're going to get one. If they don't, the can is kicked any longer, the thought is going to be that President Xi is just trying to extend into the 2020 election, so he'll create leverage and get Trump to sign anything. Trump wants this as a done deal way before the election, so it's another thing he could say checked in his box. But China knows that as well. I think this is an important deal to get done. It has nothing to do with how good the deal is. It has nothing to do with whether or not it makes Trump look good or bad. It has everything to do for the market to create less uncertainty. Less uncertainty makes markets bullish. Not that I want the market to go up, I'm just giving you a sense of the translation between what could come down the wire, what's priced in. They're kind of pricing a deal is going to be made, and what happens if there's some more negative rhetoric about no deal and a trade war, pending trade war, new tariffs and stuff. Don't allow yourself to be surprised. You're not a pro if you allow yourself to be surprised too often. Be prepared around every corner. Good luck. See everybody in the trading room tomorrow. See everybody else when I see you. Good luck, and hope we do some more of these micro, in these sessions, we'll do some of these micro tutorials if it starts working when they launch it in May. So long, guys.